S&P Mid-Cap 400 Index, and boy was it on fire in the first part of the year, calendar 2012. And what are the stocks that go in there? Well, there's a lot of them at times that we do trade. This is the index today, and you can see that it's all green, but you can see that it's broad-based, as a lot of the indexes are. And basically on the weekly chart, though, with all of those stocks combined, is that this mid-cap 400 is a very important index because it's a good gauge of the economy. We have that big bull rally just like everything else. We have a double weekly bottom. He undercuts it right down here to that lower trend line, right where the 2012 move started, right here before you. Gets up here at the top, comes down, puts in the week, puts in that low, puts in the weekly consolidation. There's 4 weeks in here. 10 week has crossed over the 20. It's in bear territory. As far as bull and bear, you have more bear than you do bull, because the reason why is, yeah, you've got support at the 50 week and 100 week and all of that stuff. But the problem is that that blue line is the 10 week moving average, and that 20 week, and there's a big separation. Any move up in the mid cap, it's going to take a lot of stuff to move these stocks again in July when they get into reporting their earnings, because they're going to experience lower growth in the S&P mid-cap 400. Let it be known on 6/12/2012. That's a July issue for the S&P mid-cap 400, and we can clearly see where in other troubling times back in 2011, where they made their lows down here, we bought most of the stocks in here at that 200 week where they found their bottoms. And so far, with lower growth around the corner for a quarter or two, mid cap is going to have a little bit of a problem. Not only that, yeah, you got lower gasoline. Yes, you got lots of things going on in the U.S., but the thing about it is that right now they're going to have to go through that slowdown. And the risk is that they can break these calendar lows over here. Here's where they made bottoms in December. Or here's the weekly chart over here in December now. And here are the months that were over here. And basically we can break these lows and come down lower. So beware about the S&P mid-cap 400 as far as getting into the July earnings quarter. Yes, there's lots of bull cases. Yes, housing is getting a little bit better because you got rates at all-time lows. Yes, you got the Europe thing once again. You got all of these things going on. But the problem is, and the reason why I'm letting people know it now, especially the bigger people that we have, is that growth contraction is going to be there as forecasted 6 months ago. But we will go ahead and update this S&P mid-cap 400 relative to that July period. Is these stocks could come down lower because of the slower growth. Then Mr. Bernanke could step in with QE3, provide that liquidity, never fight the Fed, but get ready to get your bullhorns on when that time comes. So basically marking the estimates down of slower growth would be the next process during the summer. Will there be periods of rallies? Sure, there always is. Will there be reversals? Yes, there will be. Price volatility has increased as forecasted to all of our bigger traders, as it has been, and the volatility is there.